ING and it earns 1.1 when you need it back, you tell ING to send it back to your account. So
It's really,
there's no minimum balance that you have to deal with, and it's real easy to work with. HSBC is another one. There's a couple of internet banks where you can get a little better rate of return without minimum balances, and it's fully insured. So it's very safe. That's a chicken investor location. But like I said, everybody's a little bit different. And the last question. Is gold a good investment in a down economy? Or just another bubble? I'm not going to identify the person that asked that question. I don't like hard currency or hard commodities. It's a commodity. Gold is a commodity, and it's a lot like a lot of the commodities exchange. The oil, the sugar, the corn, the oats, the pork bellies, the copper. This is all traded on the Chicago Board of Exchange. There is nothing more volatile than that. If a person wants to be investing in gold, they should be buying the gold mining companies. And there are mutual funds. Some fund families will have a gold mining fund. And if you want to invest in a gold, I would rather invest in a company that's mining the gold than to actually hold the gold. Or the Cougarans or whatever. I'm just not a big believer in that. You can't trade them very easy. They're bulky. And I don't care how many ads the Christian television and radio networks put out. Just remember, those people pay for advertising there, and they're trying to sell a product. And very, very few people should be involved in commodities purchasing. It's like buying art. Is art a great investment? I don't know. I have a house that has several Kincaids in it. I like my Kincaids, but they're only valuable if you're going to sell them. I'm not selling my Kincaids. What good is that? Yeah, it might be a good investment. Maybe they're worth twice as much as I paid for them. I don't know. What do Kincaids go for? I don't watch, but I can tell you what my mutual funds are selling for. But I don't follow my Kincaids.
Dan, let me ask you a question.
Yes.
Did you put this on Facebook, Dave?
What?
Did you put the question on Facebook?
No.
Okay. Oh, is that allowed then?
No, but
Yes, it is.
Okay.
In fact, I said at the beginning I wanted to take the questions here first before I did these.
Oh.
Dave.
yeah, it's a follow-up question. to
Sure.
that. I mean, assuming you can find some broad-based commodities fund, I mean, is it totally inappropriate to not have maybe 5% of your portfolio?
No, it is not inappropriate. Everybody's a little bit different. And there are funds that actually buy the commodities. In fact, if you wanted to hear what my latest is, I have a client that did a lot of research, and he's really into natural gas. Around the world, these emerging economies, you might think that some of these companies in China are going to be because of growth, when you think of retail and everything, but I don't know if anybody's seen on the internet lately, there is a power plant that was recently built when they dammed up a river in China.
yeah, they moved a million people.
This dam is like having 10 Hoover dams. One dam. Putting out that much power. Do you think that there's a reason why they're building electric power plants? It's because they expect a lot of growth. A lot of growth. And so, but what about those companies that are going into China to build roads and bridges and building power plants? Those are the companies that are probably going to be doing very well. Anyway, so commodities, there are commodities funds, and I don't think that there's anything wrong with that at all. I certainly wouldn't want to